We're different at Cornerstone, and the idea is, it's about imagination. And I have to tell you how delighted I am to be here. It is being in a group of friends here. It's lovely to see everybody. And what we're going to talk about is the shifting dynamics in the capital markets. But that piece, that clip, you saw the fierceness combined with the love and the opportunity and the beauty, and most importantly, the imagination. And so when you think about the capital markets and the shifting dynamics, I'm reminded, aside from Gene Wilder, I'm reminded of Albert Einstein. Einstein said that imagination is more important than intelligence. Sure, he's able to say that, but the point is, imagination is so important. Think about what it could be. Did you guys catch the chocolate waterfall? Like, how cool is that? It's beautiful. And again, it's not typically what investment banks talk about. But another thing that Einstein said is that in life, one shouldn't strive for success. Don't strive to be a success. Rather, strive to be of value. Okay, so think about that. And if you put that together with his thoughts on imagination, you start to think about what can we learn about building enterprise value, building value to asset owners as they make their decisions on portfolios. Again, taken together, there's a lot to learn. Imagination, though, it has to come with execution. It has to come with pragmatism. So yeah, you can dream about it, but there's got to be pragmatism. And when I looked around for 25 years on Wall Street, I looked for the deficit, what's missing. And frankly, there's a lot missing. And so one of the things we think about at Cornerstone is, okay, so we know that asset owners, endowments and foundations and family offices, the world of wealth management, wanted the institutional research capabilities of an investment bank, okay? And then the asset managers, okay, very often that are part of a big global financial services firm, they want insight from an institutional research organization of an investment bank, but their end clients are endowments and foundations and family offices and the asset owners. So they're spending a lot of their time courting those clients, not doing the research and the analysis. So you basically have these three pieces of the capital markets that are very often sitting at one very large integrated financial services firms, and they're silos, and they're not synergistic, and the parts are not working as they should be. But when you talk about big financial services institutions, there's a lot of infrastructure, power infrastructure that's been there. A lot of people have been served very well by these organizations, so why change? And so when you look around and you use your imagination, you can start to think of a new form of firm. And that's what Cornerstone is. And so when we look around, our focus is different. And we're sitting in a moment of really unprecedented change in the world. And I think that unprecedented change is going to lead to a groundswell of demand for what we call sustainable investing, or frankly, impact investing, or double bottom line, or triple bottom line, or values-based investing, or ESG integration. Whatever you want to call it, the bottom line is we'll know we've made it when we just call it investing, okay? Because that's what it is. And by the way, it's not just investing when an asset owner has money to invest in the stock market or bonds or other securities. Every dollar that comes off of your balance sheets, the corporate investing, that's what's going to change the world. And so when we look around, there is opportunity to seize, but we have to observe and acknowledge, okay? We have to figure out how we're going to use trillions. And by the way, it is not millions that we need to move towards any particular initiative. It's not billions. It is trillions that we need to move towards dealing with issues of water scarcity and climate change, healthcare acquisition, education, infrastructure, rebuilding a crumbling infrastructure or building one that doesn't exist. We need to think about economic inclusion, flipping the pyramid, gender equality, access to energy, broadband, water, access to mobility for opportunity. So again, it's trillions we need to move. And at the same time, we're in a moment when there's stuff unprecedented in the capital markets. I mean, look around. the extent to which you have negative interest rates in lots of parts of the world, developed and undeveloped, that's messed up. There's something wrong with negative interest rates. It's not how it's meant to be. And so what you're seeing, in our view, is that the economic engine of growth is stalled. There should be a multiplier effect when any hire is made, when any dollar is spent. That multiplier effect works to get things going. But what we're seeing is monetary policy seems to be at the end of its useful life, of its capability. You're not seeing pro-growth fiscal policy. You're not seeing pro-growth tax policy. We've got a problem. And the only way to turn those economic engines of growth back on is through you, through the trillions that you deploy every day. And you need to express your priorities. You need to express your values, both when you talk about sustainability issues, but in the CapEx that you spend. So when we think about all those unprecedented factors in the capital markets, we also think about structural issues of the capital markets and what else is going on. Well, we have a level of economic concentration, the likes of which the world has never known. There are about 60,000 listed stocks in the OECD. Just 1,000 of those stocks represents about 7.8% of all the revenues in the entire developed world, about 8% of the jobs. That's just 1,000 companies. When you think about the level of regulatory scrutiny, I don't have to tell all you, but post-crisis, it is extreme in terms of that level of regulatory scrutiny, the burden, the complexity. And it's appropriate, frankly, given the economic concentration of power. And now let's talk about transparency. Well, you think about social media, face it, everything gets around very, very quickly. So you might as well be transparent, because we'll find out. And there needs to be, and we'll do something with it when we find out. There needs to be authenticity associated with that transparency, but the speed at which information moves is unprecedented. And Aaron and I were just talking about the extent to which transparency, you got to find a balance, because you want transparency, but you want authenticity, and you want honesty, and you want to challenge yourself, but you don't want to lend to the uncertainty. So I'm not saying that there's anything such as perfection. And by the way, we know that Aristotle said the perfect is the enemy of the good. So transparency is not perfect, but it's something towards which you strive. And we saw that. We had a wonderful panel just now on traceability. Transparency, collaboration, commitment, wonderful things. And by the way, you can argue that we're in a time like now when trust has been betrayed. The trust in the world's institutions, all right, is at a hugely low level. There's a little equation that you can think about. It's something called the trust quotient. And the trust quotient is as follows: intimacy times credibility divided by risk. And think about that. So right now, the trust quotient in the world is pretty damn low. But think about for yourselves and for your organizations, how can you start putting that trust quotient higher? It's a good thing to think about. So again, unprecedented is the level of transparency we have, which we've never seen. This confluence of factors, another one, big data. And you all know, massive amounts of information that turns into noise, frankly. So how do you pick out what matters? But we're getting better at it. And when it comes to the data that Wall Street wants, it's useful data, decision-useful data that's reliable and that we can use for projections and comparability. We're getting closer. So we are at a time when data is becoming more useful for predictive insight. Further, we're coming to a place where we've talked about this a little bit before, but we are at the cusp of the most massive intergenerational transfer of wealth that the world has ever known. The World Economic Forum would tell you that $52 trillion over the next generation is going to transfer hands to a group of investors that will be damned if they're going to trade off economic returns and social returns. They want both, and they have a right to both, and we can do it if we're thinking long term. And so they have that intergenerational transfer of wealth. At the same time, we have the other factors that I talked about, data and transparency. We're also seeing the convergence. I mentioned a few of the pieces of the capital markets, but right now, we're starting to see a time when those asset owners that I talked about, plus the asset managers, okay, plus the investment banks, plus the exchanges and the accountants, all right, the regulators, the academics, we're coming to a time when you're seeing a convergence of demand for the kind of investing, again, we'll call it sustainable investing, long-term thoughtful deployment of capital for both social impact and economic returns. Well, that confluence of the pieces of the capital markets doesn't happen all that often. And then finally, there's one other piece. There's a piece of infrastructure. I mentioned infrastructure. You were thinking the traditional sorts of hard and soft infrastructure. But infrastructure in the capital markets relates to data. So we are at a time when we have the Global Reporting Initiative, the Integrated International Reporting Council, and the SASB in the US, the Sustainability Accounting Standards Board, where we're trying to show kind of a pragmatic US implementation of data for corporate reporting. The idea is not to make it harder, it's to make it easier, all right? But anyway, those standards organizations are a piece of infrastructure that is really needed. And it could be the last piece that we need that goes into this puzzle that makes me optimistic, that if we can find the courage, the creativity, the innovation, the strength, the money, the capital, the money is there. It's about force of will. And I think that you are going to start to see not millions and not billions, but trillions of dollars move towards impact. And again, we won't ultimately call it impact investing. All investing has impact. It's a question of whether or not we know what it is and if we're conscious about it. But we are moving towards a place where the millennials have got this right. And the one thing they demand is authenticity. And they've got it right. They've got the focus right. We can do both by moving the capital markets, the trillions. And you all in this room have so much power and so much leadership. And by the way, the corporate sector is leading the investment sector is leading the public sector, and we do not need to wait. We need to move. We need to move money, and we need to move our focus. And so what I'll tell you, I will lead with, I would close with a thought from, actually from Mark Twain. Mark Twain said, you can't depend on your eyes when your imagination is out of focus. So what I would ask you all, use your imagination, combine it with pragmatism, and move money towards impact now. And respect financial capital and human capital and natural capital now. But it is truly a pleasure to be here among friends and colleagues, and I wish you enormous success. And I am so excited to be able to be your stockbroker, because I can't wait to talk about the coolest things that everybody in this room does. So thank you for giving me a few minutes. Pure imagination.